So with that, we'll just kind of move on to the what we're going to talk about here. The first thing is we believe that you can use to the center, the horizontal. I don't have a horizontal slider here, but anyway, Paul, sorry about that. We believe the market is calculated, and the real question is, do you know the calculations? The most important item on the charts is the price, the most important indicator, and the price will move in three directions: up, down, or sideways. Now, with what we do, every pattern starts as a correction, and we'll talk about how to label that and calculate that. Corrections can become impulses, and that there are minor waves inside of larger waves. Now, what we try and do is trade from decision point to decision point with the rules that are based on our wave-to-wave analysis. And most importantly, regardless of what time frame you're trading, whether you're trading on a 5-minute, 144 tick, or whatever, knowing the higher time frame pattern is the most critical. And it's the higher time frame pattern that allows us to participate or to anticipate the next decision point. So universal mistakes that traders make: they buy the top or sell the bottom. I was really good at that when I first started. The common comment for this trader is, if I would have just done the opposite, I would have made money. Can you still hear me okay? I'll move this mic over a little bit since I had to change monitors. Is that better, Jane? All right. So why do traders make the mistakes? The biggest problem is they do not know the higher time frame. Let's scroll down here, and we're actually just going to go to a blank screen and start pulling over some charts here. And I want to start with an entry chart. And when I moved them all, they all kind of disappeared, so we got to relocate them here. I'll find my NQ. There we go. So I'm going to start with the end in mind. And I don't want to spend a lot of time on this because this is primarily an education session, but this is our X90 Wave Rider indicator that we use for our entry chart. So this is the smallest time frame that we use, and this is set up on a specialized Renko bar that we had programmed for us, mainly to take out the noise in the patterns so that we can see them better. So I'll go real quickly how we use this chart, and then I'll go out to the higher time frames to show you why we think that way. So we came into the morning this morning thinking the general direction has been up, but we're at a point where perhaps we could get what we call a B to C corrective wave, and that's the only counter trend wave we really want to trade, is that B to C corrective wave. So on this particular template, our basic rules are: if the background is red, we go short. Background is green, we're only thinking long. Now you can see we get several signals here in the morning, and the key to what we do is figuring out which signals have lower odds that we may want to skip. So basically what we look for is, first we see this red candle, background turns red. So depending on the higher time frame, we're now thinking short on this template if the higher time frame gives us that confirmation. Now what we want to see after it rotates, we actually want to see it pull back. We want to see it pull back at least to a green candle here, which we get here. So you can see this particular arrow, our beginning traders would not take that entry. Now they may take this one, and in this particular case, this trade would have been stopped at. It would not have hit our normal 3-point target. Same is true for this trade, though it may not have been stopped out because our target or our stop is usually 6 points on the NQ. So if the trader set that up in that order, then they would have had a nice profitable trade. We generally try to trade 2 contracts on most entries. We'll have a profit target the first day, usually, or first target, usually around 3 points. And then we will let the second one trail 5 points based on structure. Now what we get here is multiple chances to enter. And you can see that. We would have first target off. Now we probably got stopped on the second half at 5 point, on a pullback, 0775, 1475. So we would have been stopped out, but then we have a chance to re-enter. And that continues here. Now this is actually the same entry. We would not hit first target. We wouldn't enter here because the pullback wasn't far enough for what we were doing. See, we had several nice entries. So the question becomes, on a day like this where everything's working out really well, is where does it stop? You know, when do we stop going short? Does anybody ever have that question? You got a trade going really well and you want to know when to get out? That's where the higher time frame will come in, and we'll get to that. So now what we want to look at is our higher time frame chart, and I'll pull that over. So you can see we got several entries here. We went to lunch, it rotated green. Now you could actually think long, which not too many people are probably going to want to do on a day like today. But you can see here, this entry we would not take, no green candle. Here we got green, then yellow, so we could take that entry. You could take this entry, but that gets stopped out, and then there's some more short entries going into the day. And then at the end of the day, it kind of gets a little bit choppy. So here's what we did to set up our day using the higher time frame. And the thing we want to look at is wave patterns. Now, we all know the market doesn't just go straight up. But if it's going to go from here to here, it's going to do it. And it's going to pull back, and it's going to go, and it's going to pull back, and then it's going to go. Right? In fact, what it usually does is it'll come up, it'll come down, and it may do something like this, go a little farther, come down, chop around. That look familiar? Go on up, and then come down and correct all of this. So that's a pretty standard pattern that we look for. So what we want to do is we want to calculate the waves every day, where I'm on a 60-minute chart here. And we try and get daily levels every morning in our room. So if I look at this chart, the first thing I'm going to note is from this low to high, what we anticipate is a correction into the 50% 618786. We don't use the 382 a lot, so in this case it looks like it might have come right down to it. But it's more important is, how does it get down into this support level? And generally what we look for is what we call an ABC correction. And we have rules on what makes that an ABC. So high to A, we're generally going to avoid. We're not going to trade high to A. We're not going to trade low to A. It's the hardest wave to trade. So this is a place, because we don't know where A is going to stop. In fact, we don't know where A is until we have B. And to get B, we need this bounce from A up into the zone. That makes sense? So once we know we have B in this zone, then we can label this A. So just type a Y in there if that makes sense, and any questions that come up, throw them at me as we're going through this, because it's the best way to get these answered. Okay. So we have A, now we have B. So when price is right here, what we want to know is, where is C going to be if we get an ABC correction? Because we don't always. Here the pattern was A to new high. So that can happen, okay? So where's B? B is going to be our C. Our first target for C is we reverse extend. We take our fib extension tool and we go from the B high here back to this A low, and we bring it back. So it's 3 clicks. Thanks, Joan. So here we are. So as we were watching this, and this was yesterday, as we come into this zone, we can say, okay, we've been short, where do we stop? Well, our first C target is most of us will get out here at this C target. Very much like a measured move, we're going to calculate it. So you see here now, we come down to C, we bounce back up. Now what C becomes, the market repeats itself. So C just becomes bigger A. Does that make sense? Okay. All right, so here we are, bigger A. So what do we anticipate? We anticipate a correction of the entire ABC. So how do we do that? How do we calculate where that's going to be? It's really simple. We go from the high down to C, we retrace, there we are right at the 786. ABC makes A, exactly. So as we came up to this price, we're saying this is where we have to be careful longs. Now C, in an uptrend, C is a buy. So from here, we could be playing this long on that template, all right? When we get to B, the way we would define that is now we are late to be long, but we're early to be short. The direction's up, but this wave is probably getting tired. We want to be careful to the long side, but it's too early to go short until we have some confirmations. So at that point, we break down the chart. Now, if we're going to get a bigger B to C move, we want to be able to calculate where that's going to be, and we just do the same thing. We repeat the process. So today, when we're trading the NQ and we're catching the shorts, where are we going to stop going short? Right here at what ends up being bigger C. Does that make sense? Can I zoom in a little? I can zoom in a lot. How's this? Is that better? Thanks, J-Dub. You can see that a little bit better. So you can see we came right down here to our C target. So at this point, we are no longer saying, you know, I'm going all in short. We're anticipating this bounce from our C target. C's the buy in an uptrend. Okay. So going into tomorrow, this is exactly how we would use this chart. Now going into tomorrow, assuming everything stays the same, we're going to say, you know what, we're at a C buy, we get confirmation, we can go long with a target up into this zone. Everybody with me? Now this can be used on any instrument, any time frame. So we do this every day. So now I'm thinking, okay, on this 60-minute, clearly, we've been going up. We've hit this high, new high. We've ABC'd. I notice we also have this previous low. We would do this in the room. We go, look, not only are we at C, but we just double bottomed, late to be short. That makes sense? Now, we use very few indicators, nothing on the lower half of the chart here. But we do use the cloud, the Ichimoku, and I'll put that in here. Ours is a little bit different to give us additional support and resistance levels. So I would come into tomorrow, and the first thing I would do, and let's just go ahead and get us some NQ levels for tomorrow. So the first thing I would post is, you know, we're going to have some resistance. You're probably around 36.80 if you get a long signal to go long. Now, we're probably also going to have a little bit of minor resistance on a retest of this trend line. Okay, so we're going to put lines on our chart, and then we're going to trade in these open spaces. So this is how we're going to know when we can add, when we want to take targets, when we want to tighten stops. Now what we'd anticipate from here is a bounce. Nothing usually goes in one wave, right? And the thing we would have to do is now we're back in resistance from here If the market's going to sell off, we could continue and get another C. So we're going to have to watch how it behaves when we get over there. Going into tomorrow, I'm looking for a bounce up into resistance. The market's been long for 5 years now, so I have to honor that until it changes. Does that make sense? Everybody with me thus far? Anyone totally confused? So let me go ahead here. First of all, let's remove all these drawings. We know we're at a C target here. And let me go ahead and load the template we generally use on what we would call this our condition chart. So we use the Ichimoku cloud to help us with our support and resistance. So the first thing I'm going to note, again, I'm going to go back to this low, and I'm going to put some lines in exactly how we would do it for the room. Long drawing tool. So we know we have C here. We could get a bounce, but I also know that right here I've got, and I'll show you what these other lines are charted. I've got a 50%, 618, 786 of that wave. Now I also know that I'm sitting right on key support. It's been resistance. That's a significant level. All right, and we'll see how we're doing that. Now, these lines on this chart, I'm looking at a 60-minute chart. We have our Tenkan-sen. How many people here actually use Ichimoku or have been looking at it before I get too far into it? You love it? Okay, great, fantastic. Now, we do something a little bit different with the Ichimoku. Now, you see this HTF stands for higher time frame. So my Tenkan-sen is the magenta. I'm sorry, that's my Kijun-sen. The cyan is the Tenkan-sen on this. So I'm looking at a 60-minute chart. Now, what this indicator does, it will plot higher time frame Ichimoku lines. So this cyan line here that's a little wider, that's actually a daily Tenkan-sen line. Okay. This magenta line down here is a daily Kijun-sen line. So now if I go down to a 50-minute chart, because once we start, the trading day starts, we go down into this time frame. You can see here's my 60-minute. It turns out both the Tenkan-sen and the Kijun-sen on the 60-minute are overlapped right now. But I have my 60-minute lines and my daily lines on here along with my 15-minute lines. So that gives me additional levels of support and resistance because I want to trade open space. So I can come in here, I've got my 50%, I got my 618, I got my 786. And so now I know coming into the day where my open space is. So when we're going short, I know I can go short, or now when I'm going long here, I know I got space, I got a lot of room up to my next resistance level on my entry chart here. Does that make sense? So if I choose to go long, I know I've got room up to my resistance level. And at this point, I'm going to tighten stops. If we break through, if things are set up correctly, I might get an opportunity to add in or build the position. And I know by the time I get up to my 786, I'm now late to be long and early to be short on this chart. So that's how we use the Ichimoku. Now, we also use a little different settings because the higher time frame is important. I don't use standard settings on Ichimoku. Instead of the normal 9, 26, 52, I just double it, 18, 52, 104. We find it holds us better, longer in the waves, and we're trading for longer waves. What time frame? It depends on what your goal is. Are you investing? Are you in a buy and hold? Are you day trading? For day trading, and I'm going to go out to a monthly chart here, guys. This is a 15-minute chart for day trading, and we will use this for day trading, primarily futures, forex. I don't do a lot of stocks. I do trade options, and I will go to higher time frames on options. So we'll go out to that. The important thing to note, to remember, is all of this works on any time frame. So whether we're using a 15-minute, trying to figure out where C is, right? C is, it all works regardless of time frame. And probably the best way to demonstrate that, let me do one other thing. Let's go out to crude, and then I will look at any chart, any symbol you guys want to look at. So here's what I want to show you on crude. Now we talked about waves go up, they correct, they go up, they correct, and then they go up. Now we work in threes. Impulses usually happen in threes. If you get 4 impulses, you will get 5. But we just worry about 1, 2, 3. If you can count to 3 and you can say ABC, you can learn what we do. It's that simple. So here I'm showing you what we've got here is from this low to high is we have an impulsive move. And the way we know that is I will look at Baidu. Let me get through this, Joe, and towards the end we'll just go through any stocks you want to go through, all right? How's that? So we label our impulses 1, 2, 3. Now we label them, originally this was an A. It became a 1 when it kept going up and we got 2. So 2 will be the 161 extension of the first wave. So you can see what happens here is if I extend this, I'll just overlap it. Here's where 2 was. 3, and we got this one to the penny in the room. 3 is the 127 of 2. And it came right, I mean literally right to the penny that day. So at that point, 3 is complete. And just like ABC, here's 1, here's 2, here's 3. Okay? That makes bigger 1. Works just like the ABC. We anticipate patterns correcting. Bigger 1, we anticipate that it comes back into support of the entire wave. And so what happened is we got an A, B, C, right to 50%. We came into the room today on crude and said, guys, it's likely to go sideways. We're at a key decision point on crude. And that's really what crude did today. It just went sideways. Now, my anticipation is that it'll bounce up here into resistance and come down maybe to the 618 or 786, just because crude tends to extend. But we have to trade it wave to wave, because it could also just come down into that support and then continue its uptrend for the bigger wave 2. We have to do this wave to wave. Right now we're at C, that's a buy in an uptrend. I have to anticipate this is now bigger A, a move to bigger B. Does that make sense? It's how we anticipate wave to wave. And crude has behaved perfectly. That's always the tough question. What we say is to find the impulse, you want to look for the correction. So in this case, I could just look at this chart. This one was pretty easy. I can just look at it and I go, well, that looks like A, B, C to me. Here's the impulse. So crude's actually pretty easy. So if this is impulsive, how's it divided? Well, there's the first wave, there's the second wave, and the third wave is a little smaller. And in fact, if you look at this here, you almost have a small 1. Now as I look at it, there's 2, there's 3. So there's your first wave. There's wave 1. Now it didn't correct all the way down, but there's your wave 1, there's your wave 2. All right. So you can start from where you are today and work backwards to find the pattern. Does that make sense, GF? You can do just the opposite. You can start with sunlight blasting through my window right in my face here. Hang on. Can't see the chart. Let's look at a monthly chart on the Dow. All right, here's a monthly chart on the Dow. Goes all the way back to 1980. And you say, where's the pattern? Well, the pattern is actually pretty simple. Now, if we call this wave 1, obviously wave 2 went way beyond the normal 1618. All we do is we call that extended. And there are other numbers out there. We could go, that looks like a pretty big wave. Let's go 461%. Why that? All right, so this wave 2 went all the way to the 4618. Not a big deal. It's a big wave. Wave 2 is the wave that most often gets extended. So if we then extend wave 2, what do we got? There's wave 3. Now this is on a monthly chart, guys, of the Dow. Right. So what happened at wave 3? Almost to the tick, 14.2. We got the big sell-off. The global financial crisis, right down to 618. So at this point we can say, all right, so 1's complete. The 1, 2, 3 is complete, bigger 1. So let's project where this market could go. Might not, and it's not going there tomorrow. So if that's bigger wave 1, where's bigger wave 2? Bigger wave 2 is up here at 22.5. So everyone says the market's really extended right now. Maybe it is. But there is that bigger target out there. And look what's happened here. All right. Now we're up to 17 almost. And then I can look at this and I can go, well, wait a minute. Let's take the Dow down to a weekly. Let's remove all the drawings. We're working backwards now from the monthly. And we'll go from the global crisis low here. And we'll look at this and we'll go, you know, here's the first wave. Didn't really come down to the 50%. So what we call that is minor. It didn't get to the 50%. In fact, it got pretty much right to the 38, the 382. We'll go ahead and put that in here for the next couple examples. Just leave that on there and save it. All right, so it came right down to the 382. If that's a minor wave, then it went to a new high. Now, a minor plus a minor by our rules makes a major. We have major and minor waves. We have major and minor structure. We have major minor levels. All right. 382 is a minor level. 50% the zone is a major level. But when we overlap these waves, now we have symmetry. Minor plus a minor equals major. So we have a major wave symmetrical to the 382. And we can see what's happened there. So this is now one wave. Wave 2, we're there. And look what happened at wave 2. The market is calculated, right? All price is doing is measuring human behavior, and humans let it get extended to a certain point, and then they get nervous and sell off. So now what we have to do is watch and see how the pattern continues, you know, whether this trend line is going to hold, all that good stuff. All that makes sense, guys? You see how it's not easy, but it is simple? Okay. I mentioned this works on any symbol, any time frame. So let's just look at Aussie dollar on a monthly chart. I don't have that data, Bob. I don't think. Let me look. Is that Z? Is that symbol Z? Well, we'll try and look at that, and we'll look at Bido. Okay, Sophie, that's an excellent question. The way we don't know one. Let me go back to this kind of drawing here. We have a wave up, wave up, wave up. We don't know if this is 1 until 2 is in. Okay, until that point, you know, and actually, how's price really go? It goes like this, it goes like this, it goes like this. Right. Same over here. We don't know this is wave 1 until we have wave 2. Everything starts as ABC. So when we get here, we can say, well, that's clearly impulsive wave 2. That must be wave 1. Until that, everything's A, B, C, right? This is A, this is B, this is C. Now it's 2. We go back and call that 1. It's also why we can be wrong and still make money, because we don't trade A. A is very hard to trade. But we do trade B to C. And B to C, if we're wrong, turns into 2, we actually make more money because it impulsed and we're anticipating a correction. So it can get confusing, and I can tell you it's hours on looking at charts before it really starts to sink in. So, and here, I'm not really going to do a wave count other than to just kind of look at this. Here's the Aussie dollar. You see from the low to the high, came right to 382, went to a new high, much like the S&P and the Dow. No, that's Elliott wave, Jeff. I think you're talking, and that's as much as you just heard everything I know about Elliott wave. Hang on just a sec here. I got to clear the throat. So, but, and we have people who know Elliott wave, and some people it helps them, and some people it kind of gets in the way with what we're doing. So the main thing, yeah, we just, impulses are 1, 2, 3, corrections are ABC. But that's a very common thing that people ask, so not a big deal. So now we pulled down to the 786, so we'll call that wave 1. And the question is, will there be a wave 2? Now, I just, in all honesty, that's a really long time high, I think, for the Aussie dollar, but we want to be aware of the potential. So we pulled back, we started a new wave, went to a new high. We're going to overlap that. And you can go back and look at our posts on the blog. But here's symmetry again. And now 382 seems to happen more on currencies than it does on futures. Oh, no problem, Jeff. Ask all the questions you want. It's the best way to clear everything up. Because this recording just touches the surface of what we do. We've got over 100 hours of recorded video training that we did over the summer and fall that we can put up. And we will go through gold also. We'll look at gold also. Brian. All right, so now we're at the 382. So on my post, I just mentioned, look, 382 is minor. But we're talking about minor of a 14-year wave. And not only is that a minor, and you'll learn this over time with us, but it's a minor at what we would call after, at a key level after a minor. So we actually have a name for this. We call it a minor to a minor, right? Minor pullback to a minor lower low. That's where it short squeezes. And I'll show you an example of that with Apple on a smaller time frame chart. So on my post, I said, look, guys, I know the Aussie looks weak. Australian economy looks like it's weakening. Australian central bank says they want a weaker Aussie, but we're at the 382 on a monthly. I'd anticipate a bounce. So be very careful going short. Now, we had a month, we're 2 months into a bounce. It could short squeeze up to parity and still drop down to 80 because the long-term goal of the Australian Central Bank and this chart is 71 cents. But it's unlikely to do that. It could come straight down, but it's more likely to bounce and then come down. And the only question is how high does it bounce before it rolls over. So that's on higher time frames. Now let's just look at this real quick, and then I'll look at so the first one I see on there is Baidu, and I'll start there when we go to the individual tickers. Whoops. Got thumbs today. All right, so now we'll go to Apple here on this monthly chart. Let's remove all the drawings. Showing an example of that short squeeze setting up. Now, Apple's been interesting, but it's also behaved quite well. When Apple was at 200, if you told people Apple was going to $80, they would have called you crazy. But that's what it did, and it did it with ABC pattern. There's C, and obviously it took off. Very extended wave 2. But came right to the 50%, and it's gone from there. So let's break this down a little bit. So it came down to this 50%, got this step. I can't remember if we bought calls here or here. Now, the other thing to note is there was a perfect death doji up here at the high of Apple. Get us in short. Now, we came right to the 618 resistance. So at that point, what we're looking for now, the other thing is, I'm actually looking for a move potentially down to 320. And the reason I say that is this is A, here's B, where's C? 330. All right, so now we have confluence. Background colors, I'll talk about that. All the background colors is a condition, not an action, it's condition. When the background's green, the condition is support. Simply means we anticipate support holding. Now, because this was so extended, it rotated here to 382 and support was down here a little bit lower. But now the background's red, we anticipate resistance holding. Right? And everything we do is based on, I think Apple has a strong chance of coming down. But here's the thing. It needs to get to a decision point here, here, and now there are patterns that break the ABC. If it comes into this support, it could go from here because this is 50%. It doesn't have to come to the 618. I anticipate at least the 50%. That doesn't always happen. But from here, it could do this and go. So we have to watch it at this point. Now, if it takes out here, then I anticipate it taking out this and getting there. But it's too early yet. Does that make sense, KJ? So we'll break it down even farther. We'll get down to a 60-minute chart on this because this is how we watched it. All right. So we came up to the 618. Now, see here, the 382 held it, but we're cautious around that 382 because in a perfect world, the 382 is simply A, back to B, down to C. That make sense? Right? A, B, C. Yeah. B, and we're looking for C down here, which isn't in yet, but that's what we're anticipating because that's what's normal. Okay. Now, normal doesn't always happen, but we got to be aware of what's normal. Now, I mentioned I was going to show you a short squeeze pattern, and we got one right here. From this high to this low, this happened to be at that 50%. It came down just above the 50%, right? Got a very minor pullback, came down and hit the 50%. What it does is it sucks in traders short here and then squeezes them out. Then it comes back, tests it, and then it goes. And the same thing can happen to the upside, especially at key levels. Minor pullback, just sucks in a few more people long, and then it comes down. So we actually look for those patterns on different time frames. So that's Apple, and that's how we would calculate Apple. At this point here, we would have been thinking about buying puts. First target, we probably would have taken first target at A, and then we could add back in at playing the B to C. Stop above is high if we're doing puts. So what was that first ticker someone asked me to look at? Baidu? Any questions come up with any of these calculations, let me know. And how we do them. Baidu, let's look at Baidu. Long term or swing trade? Okay, obviously we got, let's go out to a weekly here because this is looking, first thing I would do here on this is, obviously we're going up. Was there a reason for this high to be the high? And the answer is maybe, right? This is on a weekly chart. So that's pretty close. Within $5, within a couple of percent. We'll look at Amazon also. Okay, so here's what my thought would be on Baidu. Let's say we just hit that target on a weekly chart. We're coming down to the 382, so we might get a little bit of support here. We have reason for that to be a level of support. So look at this. This is actually a more reasonable level here. So maybe we even get below the 382 and then bounce up. But my target, now if I wanted to go long, I would wait. I'd be waiting for price to pull into the zone and look for an opportunity to go long. If I'm going short, I'm a little late to get short. I don't like to call the top. Well, I'm actually a little early to get short. Sorry, I said that backward. What I'd look for is continue on down, pop back into the resistance, and then come down. But I would do this on a smaller time frame. So I'm looking at the weekly here, set up longer view. But today, now we come down to the daily. All right, this is pretty extended move down here. I anticipate maybe it comes down to this level, bounces, and then we have to see how it behaves. I wouldn't want to get long So it got, maybe even filled this gap. The 618 right here on this, where it gapped up to. I have not DH, to be honest with you. I basically don't use volume at all. I don't use, pretty much this is what you see on my charts is what I use. I will use the, let's go ahead and do that. I do use Ichimoku. Okay, so I'm in the cloud, which is neutral here. Now I mentioned we use a little different settings. Usually you can look at a chart and see why. It just seems to hold everything better. So right in here, it's pretty neutral. Now, if price continues like this, there's a good chance it breaks through this cloud, bounces up to the top, and there's your short opportunity. That makes sense? What came after Baidu? I'm going to ask, there's a couple things. There's Baidu FTSE. What's the symbol for FTSE on Ninja? Is it Z? Anybody know? And we will do gold also. Seems to me it was Z for the FTSE. Yeah. All right, let's see if we can do. Let's see. Come on. Charts have been loading a little slow. You bet, Joe. Well, maybe this FTSE isn't going to show up. Anything else anyone wants to look at? I'll load another chart while we're waiting for that one to pop up. Gold. Are we still on April for gold? We'll look at Tesla also. We're still on the April chart for gold, or are we on May? Here's the FTSE chart. All right. Let's go to a weekly first, get high altitude. Maybe I shouldn't go. All right. While we're waiting for that FTSE chart to pop up, let's go ahead and look at this. We broke a trend line today on gold, pretty significant, this week on gold. Gold's coming off, I think, 618 support. Well, I actually broke through it a little bit. Minor lower low. Looks like it's squeezing a few people out. That doesn't mean it goes higher, but it's squeezing out people who went short on the break of the previous low. Doing the obvious stuff. So coming off of support, first thing we're going to look for is for a move back up into resistance. Now, usually it will do that. Gold's a little different. I don't really trade gold, but the usual pattern we look for is something like that. Now, it could come all the way up to 50% and go. So we're getting a little extended here. We've had no correction. But there is some risk-averse trading going on. Yeah, so gold right now, it'd be hard to go long. I'd want to see a pullback, maybe fill this gap, and then look for a move up. But we're getting to a place where it's tough to be long. Now we did break out in this high. We got this high. Gold's probably good at least till 1417. Bigger resistance is going to be up at 1565, probably right at the 1600 level. maybe pull this out here a little bit more. What was the high at gold? This is about it, 19 something. All right, so what's next? Gold, we're back to the FTSE. There we go, we got a weekly chart going. So weekly looks a lot like every other equity market. So let's look at this. We got a push up, minor pullback. So this is going to be all one wave. We're going to say we're right at 2, and look what we're doing here at the decision point. We're kind of going sideways. So at this point, to go long, it really needs to take out this high, pull back, or it needs to come back into support at least of, let's say this wave here, before I'd be thinking about getting long again. And we do have a trend line to watch, and it's sitting right on it. So we're getting pinched here. Big moves probably coming on the FTSE. Yeah, we'll look at copper and see. So are we good on the FTSE? FESX JP, I'm not sure I can get, let's see if I got that. Let's, we got 15 minutes here, so we're real good. We're still good here for a couple more minutes. And I'll show you what we've got to offer here after that. Let's, I'm going to slim this down to stuff that I got pretty easy to find here. Look at silver real quick, and then we'll look at copper. And if we get a chance, we'll look at some of the other stuff here. Okay, let me change to a daily yet. I don't know why, what's with my data taking so long to load on Ninja these days? Not even let me pull over another chart. Well, let's do this. Let me show you what we're going to, while we're waiting for those charts, we'll go back to them, guys. Shouldn't be, but maybe, RB. Let's take a look at what we're doing here. Now, all of these things, we have a lot of stuff that we offer, and we saw some of it. The big thing that we do, probably the most important thing, is the training. Now, this training was actually originally set up as a program for a prop firm. And we had people in the room all summer, most of the fall. And unfortunately, things with the prop firm didn't work out. So we had a very small group that we were going to have trading in that prop firm. It didn't happen. So some of those people are still around, but what we've decided to do is bring that training. We recorded all of it. It was all done live in the market. That's not my voice you will hear on the training. It's Sean McKisson's. He really developed all this, taught it all to me, and then I took it and built the indicator systems that you've seen. But originally that was for the training and the systems was $10,000. Now when the prop firm fell through, we actually refunded half of that to everybody, just because we felt that was the right thing to do. So the more accurate price would have been originally was $5,000. But what we're doing is we're lowering the price of each individual, and it was all one package. So what we've done is we've broken it out and lowered the prices. Now a couple of these things are incorrect. You can order them on the website at these prices. A couple of them on the PayPal thing's messed up. Or you can just email me info@nextlevelfuturestrading.com, or email us, I should say, and we will do everything through email. Either way, works fine. Especially if you see an error on the pricing and you click the buy button. So we have the recorded videos That's over 100 hours. You have access to those. Um, Normally $19.95, actually normally $24.95. That's a misprint. Uh, Sean's willing to let that go for $14.95. I get everything's lifetime access. Now the X70 trend indicator, which you did not see, you can see on the website, is the indicator I used to build the X90. So everything started with the X70, and then I improved upon that and added to it and built the X90. And then what we do with the X90 package is we include the X70, what we call Trend Elite. On the X70 and the X90, all the settings are locked. X70 Trend Elite allows you to build your own systems, your own trade setups by doing your own calculations. Now we also offer, normally at $349 a month, monthly memberships, which includes all of this while you're a member. So you can go online, watch the videos, come into the live room, and only owners of the system have access to the live room because it's free and it's a training room. I take a lot of trades, and I'll take more, but they're exercises. And what I try and do is I try and define them, and I will say, this is a B2C short, or this is a bigger B2C short that we hope turns into wave 2, so it's more aggressive, so I'm trading more contracts. Or I'll say this is extended. We're at a resistance level, but everything is up, so I'm going to go long, but I'm only going to trade one contract. I'm going to trail it tight, and I'm going to take my target a little quicker. That's what the live room is for. And it's a lifetime. As long as I'm doing a live room or we have someone doing the live room, it's open to all members, all lifetime members, and everyone who's paying the monthly membership. Now, I know normally they say for the first 24 hours we're going to offer you those prices. Anyone who's attending this webinar or who watches it on the recording, all you have to do is drop me an email. Even if we raise the prices on the website, we will honor these prices here. Now on our daily levels, that's just simply an email. And I do them after the market, usually, but certainly before the market opens the next morning. And it just comes out, and it just lets you know where your support and resistance level are for these 5 major instruments here in futures. And then I do the 7 majors, or we do. I'm doing them right now, but we do the 7 majors in the Forex. So we do euro dollar, pound dollar, dollar yen, dollar Swiss, Aussie dollar, dollar Canadian, and the Kiwi, New Zealand dollar. So we send out levels for those 7 instruments on a daily basis. And the way that really works is if you want them just for futures, it's $59 a month. If you want both, or if you want them just for Forex, it's the same. If you want both, it's $89. Ichimoku higher time frame. The only reason I charge for that is because I had a programmer design it, and I have to actually license it on Ninja servers. If you want the free normal Ichimoku for NinjaTrader, and all of these only are programmed for NinjaTrader. But if you want the normal, just the regular Ichimoku, drop us an email, and we'll send you the zip file you need to install Ichimoku on NinjaTrader. Everyone got that there? So we'll minimize it and see if we got some charts up. All right, silver on the weekly. Oh, one other thing, drop me an email Monday and Tuesday of next week. I will open up the live room free for anyone who wants to come in and visit. Drop me an email, info@nextlevelfuturestrading.com, and I will send you the link or the registration link for you to come in, because it's much easier to see what we do in a live market. So let's take a look here at silver. We're testing the 786. We've got this little minor. Certainly not behaving as well as gold. If we're going to bounce our first level of resistance, it's going to be up here at $27. It's really going to make a move. And we're looking at 35.38. So if you wanted to go long silver here, the real trade would be you go long, stop below the low. If you want a tight stop, you put the stop right here below this low. But this is really the right stop over here. That makes sense? That's on a long term. If you're buying and holding silver forever, now's probably a pretty good time to buy it. Just looking at it. You know, I mean, get out of it if it gets below 13 bucks. Should bounce up in the 35 area. Well, certainly $30 fills the gap here. 26. So that's not too bad. Did you get the email address there posted? Got it? Okay. Well, Yana, that's about all I got, unless there's some other questions here that I missed or symbols that I missed. We can go over. I'm happy to do that. Copper. Let's look at copper. Copper's had a tough week. He did not have a great day today, it looks like. Dr. Copper. Now, wow, that's a definite breakdown. That does not bode well for the market. Oh, you bet, Valerie. Happy to do it. You know, it's relatively new because of the situation with the prop firm. So we're just trying to build a community of people who think fairly similarly in trading, but also have some different ideas and some useful ideas that we can talk about. You know, one of the things I talk to people in the live room about when they get the indicators is when you first get the indicators, take every trade. For the first week, just take every trade. You'll be at least on one instrument. You'll be completely exhausted. But then what you want to do is you want to look at the trades that lost money and what was similar about all of them. And then you look at the trades that made money and what was similar. We lost my audio. I don't know how that happened. I had it just before. Oh, okay. Audio's good there. All right. Well, Yana, that's about all I got for the day. And if no one has any other questions, I can turn it over to whoever it is that follows me. And thank you very much for this opportunity, guys. It's been a lot of fun. I was actually listening in to just about everybody before me today. And there was just a lot of really good information.
Well, Don, thank you. If no one else has questions, we want to say thank you for your time and sharing, and as Valerie said, for your generosity to show your trading room and share with all of us. We really appreciate it, and hopefully we'll have you back. Our next presenter is Mr. Tom Busby. He is from the Diversified Trading Institute, DTI, trader for a long time. Also, he's participated quite a few times in previous trade-a-thons for TradingPub, so we're very excited to have him back. There is always a lot that he can share with us, and hopefully all of you will learn a ton. So Mr. Busby, if you can get your mic going and we can test your volume, and I'll start your presentation. Oh, it's there. Whenever you're ready, you can just take it away.
Testing 1 2 3. Testing 1 2 3 4. Thank you, Yana. Can everybody hear me okay? Okay, let me see if I can do something here. If I can do something, we might have a little extra special fun. Let me go to desktop sharing. Start desktop here. Can everybody see the roadmap there?